I'm pretty sure you guys are already seeing it. The housing market, it has soared to new record highs right here in America. And they told us that this wouldn't happen. This is what they've told us. And well, the truth is that probably a good 99% of people have no idea that this great housing market reset is about to happen. I mean, everything is setting up for this housing reset to take place, and a lot of people are just they're about to get caught off guard. Oh yeah, and by the way, if you guys are new to the channel, please consider subscribing to the channel, and while you're at it, go ahead and drop that like on the video. I would totally appreciate it. The likes really make my day, guys. And I mean, have you ever wondered like how the real estate world would just totally flip the script overnight? Like, they're talking about this housing market crash that we're supposed to be getting, and that really didn't materialize as what was promoted. And I talked about this, and I talked about why I felt like it was unlikely to occur. You guys can definitely check out my previous videos on that. But think about this. Redfin, they dropped a bombshell just recently, talking about how real estate transactions in the United States are at the lowest level in over a decade. So people are not buying houses at the rate that they once were. But here's the real kicker, right? This isn't just some random dip, Now, like, what if I was to tell you that there was an even bigger game in play, right? One that was actually just perfectly orchestrated by none other than the Federal Reserve, right? Fed Chair Jerome Powell hiking up the interest rates, right? But you guys guessed it, things are shifting, and we're going to try to figure out the why behind all of this, right? Because if you can understand the why, then you can understand their game plan, right? Now, if we flash back to June of 2022, Jerome Powell's cryptic reset statement, you guys remember that? Now, if we fast forward to 2023, all the pieces, they're starting to fall into place. It's all part of the Fed's plan, right? But hold on a second, right? Like, what does this reset mean for you and me, right? That's the real thing. That's the real question. But I'm gonna break that down for you guys later in this video. But let's talk about something else here. While home prices, they seem to be, kind of chilling a little bit, there's this unseen ripple that's under the surface, and a lot of people aren't aware of what's happening. So this shift, we'll just call it a shift. This shift could take place and ultimately just like take down the entire market's very foundation. And the question is, like, how does this all tie into the intriguing reset from Jerome Powell and the Federal Reserve, right? Because if you think about Jerome Powell, he's just the face of the game. The real puppet masters are behind him. But ultimately, like, there's a lot more to it. That's all I'm going to say. So meanwhile, you got Redfin. Their numbers are taking a huge dip. And it's more than just the numbers game here. It's a signal of the changing of the tides. Meanwhile, you got Zillow over here, huge advertising agency offering all sorts of services for real estate agents, home buyers, home sellers, and they're in for a roller coaster ride as well. So these guys are not making it away unscathed. But here's the multi-million-dollar question, though. Like, what's really driving this? Like, what's driving this transaction volume, right? Is it just unusual? Is it just the usual suspects, like, the mortgage rates? And of course, higher interest rates are going to force people out of the market. Basically, even if they wanted to continue to buy in this market with higher interest rates, mortgage brokers and bankers, they're not going to be able to approve people for the same amount, because there's what's called the debt to income ratio. And the higher the interest rates go, the higher, or the more thrown off your debt to income ratio is going to be when you apply that to the new mortgage payment. And so basically, the higher the interest rate, the higher your mortgage payment. And so since that is how it works, that would mean that as interest rates go up, the amount that you can buy goes down. And it's just a simple fact of the matter. Now, from Redfin's recent report to Zillow's earning twist, we need to really go ahead and break all this down, right? So let's start off with the CEO of Redfin. Now, he recently pointed out that the sales volume has pretty much reached a new low, which aligns with the reset that Jerome Powell and the Federal Reserve had alluded to back in 2022. Now, the objective of this particular housing market reset is to achieve this balance, this perfect, harmony between housing supply and demand. And the recent trend that has been basically characterized by excessive demand and limited supply is what he's talking about. Now, demand is pretty much lessened up due to higher mortgage rates, which we talked about. Meanwhile, supply has reduced as homeowners are basically reluctant to sell their properties. I mean, I won't sell my properties, and every one of the properties that I own is under 3% mortgage rate for the next 30 years. So I have really no incentive to want to sell. And I think a lot of other sellers are in the same boat. Low interest rate, we'll just hold on to this thing forever, right? But the hesitation definitely to sell definitely seems to be coming from the prospect of acquiring a mortgage too. Like, even if you wanted to sell your property to get another one, home sellers know how much more expensive it's going to be to get into the next property. So it's like, that's not very inviting, significantly higher interest rates than what they currently have. It's not a good look. So really, most people who are looking to buy are either cash buyers looking for a great deal, or they are renters looking to buy a house by any means necessary. Now, the pivotal question here is the implications of all of these new developments, right? Now, before we really dive into that, it is worth noting that an investor summit is expected to be held later this year. And so this is basically to commemorate the dollar's detachment from the gold standard. Big deal. All right. So there's that. Now, if we go ahead and explore the underlying cases of the shift in the transaction volume, it's very evident that demand has diminished due to elevated mortgage rates. Houses are still selling, but not nearly as much as they used to be. And then, of course, the limited supply of homes to be attributed to, to cautious building by construction firms. Like, the builders are not trying to build like they once were, because they're seeing the writing on the wall. And this is definitely driven by concerns over acquiring a mortgage at these significantly higher rates. And the Federal Reserve Bank's objective is to align supply and demand. And this is as the housing market has been a driving force behind rising inflation. Americans' most expensive cost of living component is housing. Whether you're renting or it's, if you own the house and you're making a mortgage payment, even if your home was paid off, you're still paying astronomical property taxes and elevated property insurance rates. And, especially if you happen to live in Florida, elevating HOA rates, elevated HOA fees. And so the Federal Reserve Bank's decision to raise interest rate pretty much aims to kind of reduce the demand, which has a direct impact on the housing market dynamics. And their goal is to achieve a reset where demand and supply basically kind of are at an equilibrium. And so, it's really important to highlight that the Federal Reserve Bank's intention is not to induce a decline in the home prices, but rather they want to kind of gain some control of the growth rate of the prices so that they can be more in alignment with how much, people are earning in terms of wage increases. And a deflationary scenario is not what they want, but there are some additional potential risks with their game plan here. And so, if demand continues to decrease while supply increases due to unforeseen factors like economic downturns leading to foreclosures, and this could definitely lead to a situation where home prices decline and fall off a cliff. But I don't think that that's what the Fed's trying to do here. Currently, the delinquencies, they've basically increased, which is not a good sign. Defaults have increased, but they're still relatively lower than, say, the previous year. So, but this does definitely, it's something that we want to keep an eye on, even though the risk of widespread foreclosures, it's relatively low in terms of concerns right now. But, if you consider the predictions from the real estate companies, it's pretty evident that both Redfin and Zillow foresee the downtrend, continuing. You got the CEO of Zillow anticipating a substantial decline in the industry transaction volume for the upcoming quarter. Redfin CEO, on the other hand, he's pretty optimistic about the economy's trajectory as pretty much being a stronger economy that could ultimately force the Federal Reserve to end up cutting interest rates. And that may end up stimulating the housing market even further. So it's funny because we're seeing conflicting views between the CEO of Redfin and the CEO of Zillow. But, there's a delicate balance at play here. And if the Federal Reserve Bank cuts interest rates to stimulate demand, it could obviously inadvertently escalate inflation, which could basically, it cancels out its goal. So this interconnectedness poses some serious challenges that the Federal Reserve has got to try to manage. They got to manage inflation. They're trying to sustain the economic growth. They don't want GDP to fall off a cliff. And they're also trying to align with the housing market. So basically, the real estate market is basically just kind of like, going through this significant transition in transaction volume. And most people are probably like, well, if the transaction volume has decreased, then why haven't prices gone down? Well, there's a lot of things that go with that, right? So a lot of homeowners are not necessarily in a bad situation where, okay, if the demand is down, do I really have to sell my house? A lot of people, if you look at the market, are not really in a situation where they have to sell their house. And it's like, if they were to sell their house, where are they going to go? They're going to pay a higher interest rate if they get a new mortgage. They don't, if you're a homeowner, do you really want to go from being a homeowner to being a renter, and then rent prices are going higher too? So there's that. That's not very inviting. And I think it's just very, very clear that sellers are actually in a much stronger position than expected. And this recession we were hearing so much about really hasn't affected people widespread. It's affected the tech industry and some of the higher income earners, but it really hasn't been a broad 2008 style massive Great Recession as many had predicted. So this housing reset, it's coming, but the real question is, to what extent? Like the housing market hit new records here in America in terms of housing prices. But, this housing market reset, it's going to be a different animal. That's what I'm thinking. That's what I'm saying. Me personally, what am I doing? Well, I'm stacking cash. I'm steadily looking for new opportunities, for good opportunities. I'm also interested in talking with sellers that are able and willing and able to do what is basically called like seller finance, where basically, I work with a seller who's got 3% or lower mortgage payment on their property, but they want to get out of it. And we work a deal where basically I get to benefit from their low interest rate without me getting a brand new mortgage. And there's proper ways of structuring this legally, whereby I can basically buy their property for the price that they want. I get the great interest rate of 3% or lower, and everybody's happy. So I'm looking for great deals on the market. And I'm steadily buying and investing into my favorite ETFs and index funds. And I'm also looking to continuously improve and increase the number of income streams that I have and increase the income from each of those streams. So that's pretty much my game plan. If you guys want to learn more about what I'm doing, if maybe you want to get in contact with me on a one-on-one phone call to strategize what might be best for you in your situation, definitely hit me up in the comment section down below. Or even better, I'll leave a contact for myself in the description of this video. I hope you guys enjoyed this one, and I'm going to catch you guys on the next one.